Time for our 360 round. For that, I want to bring in our panel. We've got Spencer Hakimian, Chief Investment Officer, Toulouse Capital Management, and Lee Munson, President and Chief Investment Officer, Portfolio Wealth Advisors. Lee and Spencer joining us now. I'm glad to see both of you. Lee, let's start out with you. The overall expectation, consensus looking for 8 cents a share on earnings for GameStop. Revenue expected to come in at $750 million. But what are you looking to hear, Lee?
Well, here's the bottom line. We have declining revenues. We're expecting some declining revenues at low double-digit rates. What have they done to improve things? Not much. They bought $500 million in Bitcoin. And so from the last earnings to today, listen, it's done well. It's gone up. It hasn't gone down, but you would have done better just buying some Bitcoin. So rather than buy a dead and dying business with declining earnings and a management that isn't focused on that, they're focused on Bitcoin treasury management or whatever little invention they're following from what we used to call MicroStrategies. I'd rather just buy the underlying Bitcoin and not have the complexity of all these hands in the C-suite grabbing and extracting money. I think GameStop is a dead and dying business, and I'd rather buy the things they're really interested in, which of course is just buying Bitcoin, as if that's going to solve their problems.
Okay, Lee, definitely got strong feelings there, but I like what you said about, for instance, the artist formerly known as MicroStrategy, now known as Strategy. Spencer, I'm curious to know if you have some similar thoughts in that seeing it as a dead and dying business, or is this potentially a company that is shifting how it operates?
First of all, thank you for having me. Hello, Lee. Look, they've been saying that they are going to be changing the company, and they have this massive turnaround that's imminent since the saga in early 2021. It's been 4.5 years already. And frankly, really all we've seen from this company is every time we get the meme stock craziness and their shares spike, they issue more shares, either equity or preferred or some type of debt secured by the equity, and they go ahead and they buy Bitcoin. So I'm going to agree with Lee very strongly here that I just don't see why you need to put this middleman in the middle. If you want to make a bet on Bitcoin, why not just own Bitcoin? I don't understand why you have to buy overpriced equity shares in the middle to go and buy Bitcoin. One other thing, though, that is somewhat important to me is GameStop does have a business at the end of the day, and a lot of it is hardware sales, and a lot of that comes from China. So as crazy as this sounds, I still am pretty curious. What do they say about tariffs? I mean, how much does this impact them? What is it affecting their bottom line? So things of that nature. So I'll be paying attention to that as well.
Okay, so you're paying attention to that as well. Lee, I want to pivot a little bit because I know you believe that, you say GameStop is just trading off of vibes, and you've got some other things on your list. You like D-Wave, but I also find this interesting, DoorDash and Affirm. Is it one that you like better than the other there? And what's behind that view?
About three months ago, or, last time I was on here, we talked about DoorDash. It's getting hot because of the idea that they're doing the pay now, buy a burrito now, pay later. And what we've seen, and that was catching some energy, right? These short-term traders, the kids at home gambling on their Robinhood account, that was appealing to them outside of the quantum. Now you can see clear evidence that the poverty trade is full on. So you look at a company like Affirm, that's hot right now. That is just sort of ramping up. Also, look at this tiny company we've never heard of called Sezzle. It's worth $5 billion today. It's up 200% in the last couple months. Same idea. You buy now, pay later. And so this is a hot trade. Now, there's a lot of silly things on the internet. You've got, bros out there talking about, for every burrito I buy, I'm going to put 25% down and put 75% in Bitcoin or the NASDAQ. And these make some hilarious YouTubes and social media posts. But you have to remember, your average sort of meme stock person is going to be a younger dude at home trading in his mom's basement. And when they're looking at, they don't have enough money to buy a burrito, and they're thinking, wait a minute, this is a hot market. People are getting, we don't have a lot of wage inflation. We don't know what the economy is going to be. There's concerns about recession. So I think the buy now, pay later, that's kind of the memeified vibe of the moment, and that's taking their air out of the room on the old meme stocks, and I think it's even taking the air out of the room of some quantum stocks, et cetera, et cetera.
Okay, well, Affirm on a year-over-year basis has obviously been outperforming, but year-to-date, it has underperformed the S&P 500. DoorDash is the winner in that basket there. We'll have to leave our conversation there. I appreciate both of you, Lee Munson, Portfolio Wealth Advisors, and Spencer Hakimian, Tulu Capital Management. Thank you both.